Welcome to the Personal Pension Radio Podcast, where it's all about helping you complete your financial journey to retirement. Discover time-tested strategies and get unconventional insights into wealth building and retirement that actually work. Break away from the herd and go for the retirement you dream of. And now, here's your host, the income engineer, Kraig Strom.
All right, back on Personal Pension Radio. Excited to be back. I actually took a week off, not by choice. For the first time, gosh, I swear in maybe 18 months or more. God, it's probably been about 18 months. I actually got a cold. I didn't get the flu. I didn't get that terrible flu that's been going across the country and been in the news and taking people out. I got some sort of a cold. And that just happens rarely, and I just wasn't up for the podcast or just about anything else last week when I was going to record. So I took a week off. That is what it's all about when you're in charge of the podcast, right? So back on Personal Pension Radio, I am Kraig Strom. I am the income engineer. You can find me on Facebook. You can find me on LinkedIn. You can find me all over the place. If you Google Kraig with a K, Strom, S-T-R-O-M, you'll find me in all kinds of different places. By the title, you might have guessed, I love the conversation about retirement income planning. The conversation about retirement income planning is one that unfortunately there is a huge vacuum out there in the Wall Street trained investment advisory space. Retirement income is constantly pitched as a product, or the solution is save more money, save, invest more, save more, buy this product, buy that product. I'm here to tell you the solution to maximum retirement income and that desired lifestyle you might want to have someday is not a product. Retirement income can be achieved through annuities, through stocks, through real estate, life insurance. All of these will not get you to maximum retirement income. You've got to have a strategy. You've got to have a complete plan that puts all of these things together in the right order, in the right balance to get you to maximum retirement income. That's my specialty. Now, people have been asking me lately, what does that mean? What does that encompass? What kind of things do you work on, Kraig? Do you only do retirement income? Well, only do retirement income, that actually covers a great deal. Things like retirement income planning, you've got to have your IRAs, your Roth IRAs, your 401ks. These are all things that I enjoy working on as part of the plan. You've got to have your investment account reviewed, benchmarked, fee tested. You've got to have your 401k reviewed for diversification to find out if it is really diversified or not. You've got to have your life insurance conversation. You've got to have your disability insurance, your long-term care planning, your real estate conversation. These are all the areas that I cover with my clients. Now, let me get to this part here before I forget the almighty disclosure. This is my little mini disclosure before the big disclosure at the end. I am not an attorney. I am not a certified public accountant. I am a certified financial planner professional. As qualified as I might be, please don't act on things that you hear on this show as if you are getting advice for yourself, because you're not. This is meant to be general information to get you motivated, get you excited and thinking about this stuff, and hopefully, of course, to contact me personally to meet with a qualified financial planner and actually go over your specific situation in detail. And please, dear goodness me, do not take advice or act on things that you hear from financial entertainers like Dave Ramsey or other people who are not licensed. They're not regulated. They have no oversight to actually watch out for you. So please, meet with a qualified financial planner before you act on things. And I would love that qualified financial planner to be myself, to be me. You can get me at Kraig, K-R-A-I-G, at kraigstrom.com. Just send me an email and we will connect. Now, I didn't have a deal of the week on the last podcast, but I definitely want to share a couple. So I'm going to get a twofer in here. Those of you who listen to the show, you know that I did a deal of the week a while back where I had planted my own lawn. I was excited to actually get my own lawn planted. I did all the prep work and everything myself, something that my dad and I had done years and years ago, and it was exciting to actually do that on my old house where I live here in Southern California. And I planted that, or I had somebody actually spray that hydro seed stuff down, saved me a ton of money on the lawn itself. Well, sure enough, that lawn is fantastically lush and green and tall, so I needed to buy a lawnmower. I haven't had a lawnmower in a long time, so I, of course, not being one to pay retail, started shopping. And I found a lawnmower that was just perfect on Craigslist. It's an actual Honda lawnmower. Now, Honda lawnmowers are among the best lawnmowers you can get. Honda lawnmowers like the one I got sell new for $400. $400. Now, I paid $120 for a used lawnmower that had been serviced by a lawnmower tech, ran perfectly, starts up on the first pull or two, runs great. It needed a new blade, so for $30 and a total price of $150, I have a lawnmower that instead of spending $400, I saved 62.5%. 62.5% off retail, and of course I didn't have to pay sales tax because I bought it from a private party, right? So I saved a huge amount on my lawnmower. Now, I said it was going to be a twofer. So the next deal of the week was, my title on this, my note says, I don't need a plumber. I have friends who are plumbers, right? So I needed some plumbing work done at my house. And I had an estimate of somewhere around, I think it was about $900 from a fairly large plumbing company. And then I remembered, why am I going to this plumbing company? Why I should actually just check with my friend John. John is actually a plumber, and when he is not working or he has days off, he occasionally will do some plumbing stuff on the side. I called him up and said, "Hey, do you have time to come over and take a look at this?" He checked it out. He checked out my little water problem, and for $250, he took care of cleaning up some bad piping on the outside of the house, put in a pressure regulator, adjusted that, got the regulation, the water flow in my house working right, and he fixed a couple of set up a couple of new pipe setups in the sinks and toilets in the house. $250, and he was in and out of there, no big deal. And he showed up on time. It was all great. I saved 72%. 72%. Now, you might be saying, well, I don't have a friend who's a plumber. Well, if you have a Facebook account, if you have a LinkedIn account, if you have a networking group that you belong to, yeah, you probably do have a friend who knows a friend who has a plumber. You've got a guy, right? You know someone out there that says, I've got a guy for that, right? Someone who has a personal contact. So that's how I found John. John was through a friend, a neighbor, who said, hey, did you know that John lives down the street, and when he's not working for the big company, he'll do stuff on the side on the weekends and things like that. There you go. My deal of the week. Now, segment 1, watch your step. On the last episode, I talked about rising optimism breeding bad decisions. Rising optimism, the stock market going up and up and up. Now, of course, since that last episode, the stock market took a huge hit. In one day, it took one of the largest losses ever since I've recorded my last episode. So, is that the beginning of the end? I don't know. Probably not. Now that I'm recording this episode now, the market has regained all of the losses that it had in that one day. So I'm not saying that it is the end of the world. What I'm suggesting is rising optimism breeds bad decisions. Everybody wants to know, hey, should I buy into the stock market? Why would you buy into the stock market at the top of an upswing? Right? Unless you're going to be there for the next 15 years, you may not necessarily want to jump on that roller coaster at the near top of the mountain, right? I don't know. Your specific situation would determine whether you should be in there or not, but don't let that optimism dictate your decision. I also talked about on the last episode this idea of rising optimism connected to things like cryptocurrencies. And I mentioned Dogecoin, Dogcoin. It's a cryptocurrency literally created on a spoof that a guy and his programming friend created this thing out of thin air, like just thin air. And it's over $1 billion valuation now. That is insanity times 10. Be careful about that optimism that gets people into the bad decision mode. I also, on the last episode, answered this question of that someone wrote in, what if the dollar goes to zero? Basically someone who's got that end of the world idea of, oh man, if the dollar goes to zero, you're going to want to have gold or you're going to want to have some sort of a commodity, this or that. Well, reality check on that. The U.S. is almost 40% larger in GDP than China. Something in the world that changes to the point where the U.S. falls to second place, right? If that happened, we won't be worried about the value of a dollar. We'll be like, in a Planet of the Apes scenario. I mean, that would be just an amazing turn of events. And I'm just saying, I don't know that we'd be worried about the value of a dollar. We'd all be fighting the zombie apocalypse or something, okay? So that's just my opinion. I just don't see that as being anywhere near realistic in the near or in a long-term kind of perspective that the value of the dollar goes to zero. I just don't see it. If you do, please send me a note, send me a comment, get in touch. I'd be happy to listen. I'm not big on that one. Now, this week, man, I can't believe it. Sure enough, I had mentioned a couple of times on 2 different episodes talking about cryptocurrencies and specifically this whole, hype around Bitcoin. And sure enough, between one episode and another, Bitcoin took a massive hit in its value, losing almost, I guess it was half of the value. But here's the part, man, remember I talk about rising optimism, right? Be careful. This week, I'm listening to the radio and I hear a mortgage company, right, a mortgage refinance company on the radio advertising home equity loans. All right, that's fairly normal. They advertise as part of the pitch that you can use your home equity loan to pay off high-interest credit cards, cars, debts, and the usual sales pitch that goes with refinancing and home equity lines. And then they said you can also buy the Bitcoin dip. Yeah, the mortgage company was advertising refinancing your house to get cash out to buy into the Bitcoin dip. Whoa, folks, be careful. Think about this. Taking equity from your home, which is not exactly a risk-free asset, but man, it's one of the best, in my opinion, one of the best middle-of-the-road, great places to hold and grow asset value over time because you can hold that asset with a loan, a 30-year mortgage. We've talked about that before. But this idea of taking equity out of a piece of real estate and then putting it into the ultimate speculative investment that's out there today, cryptocurrency. Whoa. Be careful, folks. Be careful, right? Buy the Bitcoin dip. That's insanity. Now, segment 2, listener questions, and I'll call it Kraig rants because that was basically ranting just now. So, Kraig, question, this comes in. Kraig, I heard you offer e-money to your listeners, and I would like to know how safe it is. Well, for those of you who haven't heard it before, I have offered e-money and access to e-money to listeners of this show. E-money is an awesome platform, web-based, that'll help with cash flow planning, estate planning. It has a secure vault data aggregation so you can see all of your stuff in one place. It's similar to mint.com, only it's on steroids. Like, it's amazing, right? So I've offered that, and you're still welcome to it. If you want to try eMoney, send me an email, Kraig with a K, at kraigstrom.com, and just put eMoney in the subject line, and I'll go ahead and get you set up with an eMoney website. You'll have it all. You can actually plug all your stuff in. It's a great tool. Now, the question is, I've heard you say, offer eMoney to your listeners, and I want to know how safe it is. And I might say secure it is. Now, here's my answer. Nothing is safe today. Folks, alert, pay close attention. Your data is not safe today. It is not, okay? $500 million in cryptocurrencies were stolen in January. It was in the news. It was in Japan. There was another one like 400 million, right? They were hacked. Equifax, hacked. Chase Bank, hacked. Yahoo, hacked. Okay? These are multi-billion-dollar companies hacked. These are companies that are supposed to have the most sophisticated, secure data on the planet, hacked. So what can you do to protect yourself? I've mentioned it, but it's been a few weeks. Freeze your credit. Folks, for $20, I think it's still $20, you can go to Equifax, TransUnion, and Experian. It's easy. It's online. For $10 for Experian, $10 for TransUnion, and I think Equifax, because they were breached in 2017, I think they're still giving away credit freeze for free. So you can have your credit frozen. So nobody can open a credit account in your name. That's the primary way that you can protect your identity, that you can protect yourself. That, and pay attention to your cash flows, right? If you decide to use eMoney, use it. Actually go in and look at your cash flows once or twice a month. Know where your money is going. Get intimately connected with your cash flow, and it will help you pay attention to any potential breaches for somebody getting into your account or hacking you, right? So the answer to the question is nothing is safe today. Nothing, okay? You can freeze your credit, though. Nobody can buy a car. Nobody can open a credit card. Nobody can do anything like that if your credit is frozen. I've tested it. I tried to get a car loan after I had frozen my credit. Sure enough, put in all my information, all online, and the loan officer emailed me back saying we couldn't process your credit application because your credit's frozen. Oh, yes, let me go ahead. And I unfroze it for 24 hours. They ran their credit application, and then it froze right back up again. That's the direction. That's one of the most secure things that you can do for your identity. Now, I was listening to Clark Howard's podcast, and he surprised me. I listen to lots of podcasts, and somebody asked me, what are the podcasts that I listen to on my phone? And Clark Howard is one of them. One of the things I love about Clark Howard is he is a cheap son of a gun. He's always looking for a good deal. And I love that about him. He's all about the good deal. Now, he got a question. Now, here's the thing. Clark is the deal guy. But over the years, what has happened is that people perceive him to be a financial advisor. Remember, he is a financial entertainer. He is not licensed to practice as a financial planner, but people call him as if he's a financial planner. That's the crazy part. And he, like Dave Ramsey, operates under the freedom of speech. Nothing else. He can say whatever he wants. He's not regulated. He has no oversight. Most of the time, Clark Howard and I get along just fine. Now, the question came in about long-term care insurance. Well, my ears perked up, so I'm listening. Clark gave a detailed answer about why traditional long-term care insurance choices have shrunk over the years and the premiums have gone way up. Real simple short story. Way back when long-term care insurance really started coming out and insurance companies were putting it out there and marketing it and selling it, they did not price their long-term care insurance correctly. And people started using long-term care way before and way more than they anticipated. It cost them billions of dollars. One of the reasons that GE, for example, GE Capital, went out of business or had to flip upside down and stop doing long-term care, and then the amount of debt they went into because of their long-term care business just crippled the company. That's the idea. The traditional long-term care insurance, they did not price correctly, and it just hurt them badly. So premiums have gone way up for regular long-term care insurance. Even people who got long-term care insurance, the premiums have gone up in many, many cases. Clark Howard mentioned life insurance-based long-term care, but apparently doesn't understand how good it is. It was like an afterthought. And he even said it was his least favorite type of long-term care insurance, was life insurance-based long-term care. Funny though, his website, Long-Term Care Honor Roll, lists 3 life insurance companies at the top 3 companies that he recommends for long-term care happen to be life insurance companies, right? So think about this, folks. Who knows how long people are going to live and stay healthy better than anyone else? Life insurance companies. They've been around for 100 to 200 years. They have a track record. They know how to price insurance, right? But funny how his website, it lists 3 life insurance companies, but he really didn't say that life insurance-based long-term care was anything other than it's not really my favorite. Well, let me give you some ideas to think about. Alternatives to the old long-term care policies, right? The old long-term care policies, premiums can go up, and most of them have. And if you die and never use the long-term care, you don't get any money back, right? So alternatives to the old style of long-term care insurance, nowadays you've got companies that will offer annuities, guaranteed annuities that have long-term care qualifications, meaning they will pay out benefits for long-term care coverage tax-free for long-term care. That's huge, folks. That is a special section of the tax code just for these types of guaranteed annuities that are designed for long-term care planning. You can also have accounts with guaranteed annuities that work with IRAs that have long-term care provisions built into them. Okay? You can't get tax-free out of an IRA, but that's a way to increase the value for long-term care. And also, the one that he really missed, I think that this is the one that he specifically missed the ball, is life insurance-based long-term care. This is whole life insurance designed specifically to be used for long-term care. And here's a big deal. It's not a use it or lose it. So let's say you get a $250,000 life insurance policy. Oh, that terrible life insurance, whole life insurance. It has a fixed guaranteed premium by contract, will never go up. And if you need long-term care, the company will pay you out of the death benefit for long-term care tax-free. And if you die and never use the policy, guess what? Your family gets $250,000 tax-free, income tax-free to be specific. Whole life insurance designed specifically for long-term care? What? That's awesome. Okay? So that was my issue with Clark Howard this week was, wait a minute, you shouldn't be giving advice on long-term care insurance anyway, Clark Howard, but if you are, at least mention that The top 3 were life insurance companies on your list because life insurance companies know how to price insurance. And a big section, growing section of the long-term care market is whole life insurance-based long-term care. So if you want to know more about it, contact me, Kraig, at kraigstrom.com. If you've got mom or dad or grandma or grandpa out there and you're worried about long-term care coverage, Kraig at kraigstrom.com. I'd love to talk to you about it, okay? Now, one final thing. This is a bit of a rant, especially for me. The retirement income information blackout. I talked to a friend of mine this week at my car show, and he was saying, I'm thinking about retiring. And okay, thinking about retiring. And I started just kind of picking his brain a little bit, and I started asking him how much conversation had he had from his financial advisor, because he said he'd had a financial planner for a number of years now, and that's great. And I said, well, how much conversation have you had about retirement income planning? And you could tell the more I asked, the more you could tell, or I could tell, that he had never heard any of the important things as it relates to retirement income planning. He's never heard the 4% rule. He's never heard of sequence risk. He's never heard of any of these things, right? He hasn't heard anything about mortality risk, nothing, okay? He's not ready for the retirement income decisions that he has to make because his financial advisor has not brought it up. So why is there this retirement income information blackout? Why isn't there more coming from Wall Street to talk about this, to educate people on what they need to know about retirement income? And here's my take on it. Wall Street controls the education for financial advisors, and they control a massive marketing budget. The marketing budget for Wall Street as a whole is over $17 billion a year. Financial services companies spend $17 billion a year. That's literally like $50 to $60 per person in the U.S., right? Digital marketing alone is over $7 billion, okay? $7 billion just on digital, Facebook, social media. Wall Street controls the marketing machine. They control the messaging. They control the purse strings. So here's the setup to this question. Does Wall Street have any financial incentive to teach me, the financial planner, how to teach you, the consumer, the customer, how to take maximum money out of the system? Of course not. Wall Street does not have any incentive to teach retirement income specifically because it costs a lot of money for them. That the more people learn how to take maximum income out of the system, that's not good for Wall Street. So it makes perfect sense that the retirement income information blackout is clearly orchestrated into the marketing machine that is the financial services industry. Okay, folks, I am here just rattling my cage trying to get this message out. Please talk to your friends. Please talk to anybody that you love and care about, especially if they're within 5 to 10 years of retirement. And ask them, have you ever heard of the 4% rule? Have you ever heard of sequence risk? Have you ever heard of the economics of retirement income? What's your retirement income plan, right? Ask these questions of yourself. If you don't have a retirement income plan, if you haven't had the conversation with your financial advisor, go and ask. Even if you think it's too soon. Oh, I've got 15 years before I retire. Great. Go ask your financial advisor to give you a retirement income projection based on your current savings and investment rates. A retirement income projection. And if you don't have somebody to talk to about that, I would love to help you. Kraig at kraigstrom.com. And even if you do have someone that you work with, I would love to give you a second opinion. I'd love to give you my take on retirement income because I'm here to tell you, I will design a plan in most cases that's 60, 70, 80, 90% more income than a typical Wall Street income plan for retirement. I love this stuff, folks. You got to give me a shot at it. That's going to wrap it up for today. I got to go take a blood pressure pill, apparently. Have a fantastic day, evening, morning, wherever you are. I look forward to it again. Once again, thank you so much for sharing, for listening, for all the great feedback. Keep the questions coming. Talk to you again soon.
Thank you for listening to the Personal Pension Radio Podcast. If you missed anything during the show, that's okay. We took the notes for you. Check the show notes for links, offers, and a full transcript. And don't forget to head over to personalpensionradio.com and download your free retirement income report. While you are there, we would appreciate some iTunes love. Please leave us a fantastic rating on iTunes by going to personalpensionradio.com/iTunes. Thanks again for listening.
Now for the disclosure. Information presented is for educational purposes only and is not intended for solicitation, sale or purchase of any security or financial product. Be sure to first consult with a qualified financial advisor and your tax professional before implementing any strategy discussed here. The term personal pension refers to a marketing name designed to educate future retirees and retirees about the economic principles behind creating their own pension-like income. The term personal pension is not intended to be confused with a defined benefit pension plan offered by an employer or by a government entity.